and their situation. So we don't want to judge people for borrowing, but we want to help them make really good decisions for them. So let's go.
Mila, could you advance the screen?
Yep.
Thank you.
Can you hear me?
Yes.
Okay. Yep, just tell me and I'll advance as you're ready. Sorry.
Okay, great. So for today's agenda, we are going to talk about the truth about student loans. We'll talk about things people should consider before they borrow. We will talk about federal student loans, private student loans. We will talk about FAME loan programs, but most importantly, we will talk about supporting loan repayment and financial wellness. Thanks, Mila. So the truth about student loans. For the graduating class of 2017, bachelor degree holders, the average debt in Maine was $31,364. It's the 10th highest in the nation. I don't think that's necessarily good news, but we have to face the reality that our students do have to borrow to obtain their degree. So how can we help them do that in an informed way and help them manage repayment on the back end? Some things that I think are really important for you to realize is that those students who graduate are actually in the best possible situation to pay back their student loans. Withdrawn students or students who do not complete often become defaulted borrowers, and most have lower debt. So they're not leaving school with $31,000 and no degree. They're leaving school with an average between $5,700 and $9,300 of debt. So they're defaulting on a relatively lower amount, but it's the fact that they haven't completed that's causing the issue. So the loan crisis is not about the six-figure debt. In fact, there's plenty of studies out there that show that the people with the highest amount of debt are often people who have graduate degrees or professional degrees, such as attorneys or physicians or engineers. And they are higher wage earners, and they can support that debt. Now, I'm not advocating that I want to see a lot of people borrowing into the six figures, but I just want to make sure that as we hear all the media discussion about $1.5 trillion of student loan debt, that we kind of keep that in perspective. And here's one thing I'll give you from 2015. Only 2% of undergraduate students actually borrowed more than $50,000. So again, that's a very tiny percent. The average graduate in Maine is leaving with $31,000, and we know that when people are defaulting, it's on less than $10,000, and they didn't finish their degree, whether it was an associate's or a bachelor's. Next slide. So before borrowing, we want to make sure that you compare award letters to find the best financial fit. Since Mila's on the phone, I'll give her credit. She's always reminded me that financial fit really is only part of it. We have to make sure that there is a good cultural and academic fit for the institution. And that goes back to what I was saying on the previous slide, which is that we need students to complete in order to manage any student loans that are in repayment. So fit financially is very important, but academically and culturally on the campus is also equally important when they're making that decision. The other thing to consider for students, they really should determine future earnings. And so this morning I was poking around Career One Stop, and I was looking at athletic trainers in Maine. And it's really great. You can actually put in, there's 800 different occupations. If you go to Career One Stop, you put in the zip code where you think you'll be working, and Career One Stop will show you the average salary, and they'll show you the high end of that salary, but they'll also compare it to the US average for that same occupation. So it's a really great tool. But then, of course, I always recommend that people use the student loan salary calculator on the FAME website, and you can see that's pictured on the slide. This is a really important thing for young people to do. I know at age 18 they have fallen in love with the campus and they're thinking, I'll just handle it when I get out. But if they can start to think about the connection between student loan debt and salary early on and before they start borrowing, it really will help inform their decision. So our salary debt calculator, you can put in how much you have in student loan debt or how much you think you'll have at the end of 4 years. So if you're counseling students, you could help them put in that 31,000 figure. That's the average for Maine. And then the calculator will actually show them what kind of salary they need to support that debt. And a good rule of thumb is to borrow no more than 8 to 10% of your available income from a monthly perspective as far as your monthly student loan payment, or another way to say that is borrow no more than your first year of salary. And of course, last but not least, we want to make sure that you reduce expenses and become financially fit yourself. Before borrowing, we want to make sure that you exhaust all scholarship and grant options. Of course, that means filing the free application for federal student aid, which you would have to do anyway in order to qualify for federal student loans. But we also recommend that you research and apply for outside scholarships. And I guess the key thing I would say here is don't just limit that to senior year in high school. You should be doing that research and applying for outside scholarships every single year. And remember to use or to encourage your students to use free resources. There are plenty of scholarship links on the FAME website that are national, that are state-based, that are free and credible. And then last but not least, make sure you speak with your college or university financial aid office, financial aid counselor, if you think that there might be other scholarships or grant options that you're just not aware of. There could be some things on their campus that they can point you toward.
We had a question on the prior screen. I didn't want to dive too far in before we answered the question. On the average student loan debt, is that federal loans only, or did that also include private loans?
I'm going to go ahead and take a guess. It came from the Project on Student Loan Debt, and so if you just Google that website, you can see the same report that I was looking at. I'm going to guess that it's mostly federal, because it is dependent on what the schools are reporting. But what I can do is go back and research that, and then we can send out an answer to everyone that's registered. The reason I say it's mostly federal is because if students are taking their maximum each year, including additional unsubsidized student borrowing, an undergraduate could easily get up to $27,000. And then when you think about just another, and I know that sounds like I'm minimizing it, but if you think of another $4,000 on top of that, it could be, yeah, it sounds to me like it's mostly federal, mostly federal. But again, I'll confirm that and send it out to the group. So thank you for the question. We always tell students, and we hope you do too, to remember to use your federal loans first. We'll go into more detail why we say that. Borrow only what is needed. It is okay to decline or return loan funds. I think a lot of students feel like once they get it, they're not supposed to return it. And then we also recommend considering a tuition payment plan. I guess the best way to think about borrowing and a tuition payment plan is to think of it as a combination of things that you're weaving together to pay that bill. So for instance, you don't have to borrow at all if you know that you can free up a certain amount of money in a payment plan. So maybe you have $200 available out of your regular cash flow that you can put toward tuition, and then maybe you need to borrow so that you'll have a monthly payment in the $100 range. I guess I kind of think of it like a mosaic. You're kind of piecing it together. I think Mila often says it's like a puzzle. So maybe it's a little bit of borrowing, maybe it's a little bit out of your savings, maybe it's a little bit of a tuition payment plan, and you do that every year as the student approaches each year of college. Okay, good. Advance.
Oh, we have power again.
Oh, great. So why do we say federal student loans first? Well, first of all, there are many flexible repayment options within the federal program. Standard is a flat 10-year repayment. Graduated is actually also a 10-year repayment, but graduated means you start with a lower monthly payment that increases over time. I think that would be a payment plan somebody might choose if they knew that they would be in a profession where they would actually be earning more pretty rapidly over the course of 10 years, because you are going to experience a higher student loan payment by the time you're getting to the out years in 10 years worth of repayment. There's also extended repayment plans and income-driven repayment plans. So many people are taking advantage of income-driven repayment plans, especially if they're looking to qualify for public service loan forgiveness. We'll talk about that in just a couple more bullets. The other reason you want to take federal student loans first is because of the deferment options. So deferment basically means a period of time when you're not obligated to be making payments, and those deferments in the federal student loan program are intended to be quite generous so that they help students. And so one of the deferment options is an in-school deferment, so as you're completing your degree. Another deferment option is called an economic hardship deferment, and that basically means you're unemployed or you're underemployed, and there's a calculation done based on your income and your student loan payment to see whether or not it looks like you could qualify for economic hardship. So basically, you're not earning quite enough to be able to make those payments in a way that's comfortable. And that, again, that is a standard calculation. But those options exist and they're available and they're flexible. And so that's why we make sure students always borrow federal student loans first. You heard me mention public service loan forgiveness. I'm sure many of you have heard or seen in the press some negative press about public service loan forgiveness. The first group of people that could qualify have just hit their 10-year anniversary in 2017. I will say it's been rather a complicated process for people, and people are not qualifying like they thought they would. The federal government is trying to make right on that. They did some extensions for a temporary extension, if you will, so people could reapply to see if they qualify for public service loan forgiveness. So I will say the Department of Education is paying attention to what's happening with public service loan forgiveness, because your students are just now finishing high school and going on to college. The thing that I would recommend is that if they think they're going to work in the public sector, that they understand now what's qualified for public service loan forgiveness, do the research, talk to the financial aid office, go to studentaid.gov, so that once they graduate, they do everything they need to do to make sure that over their 120 months of payments, that they're qualifying and that they've done all the paperwork they need to do. I know it's a little forward, and in the futures they're not going to be thinking of that, but it is a great benefit for people to take advantage of. They just have to make sure they understand what the requirements are, that they meet those requirements, and that they do any logistical paperwork that goes along with that. The other reason we talk about federal student loans first is because they do carry cancellation due to death or disability. We don't like to think about that happening, but the reality is that is something that some people and some families have to tap into for cancellation. The federal student loans are fixed and possibly lower than other interest rates in the marketplace. So again, that's another good reason to do federal student loans first. And there is no credit check or cosigner required for students. So federal student loans really are about access. So the federal student loan programs, we've got the William D. Ford Federal Direct Loan Program available to undergraduate and graduate students attending college at least half-time. You heard me mention previously there's no credit check required, and it's one of the lowest cost loan options out there. You'll often hear people refer to unsubsidized and subsidized. So subsidized basically means the student qualified based on need, and they don't actually have to pay interest while they're in school. So direct subsidized loan, the interest is 5.05%, but it does not accrue while the student is school, and eligibility for that is determined based on the student's need from filing the FAFSA. It does carry a loan fee of 1.062%. It's kind of an odd number. We can thank the feds for that, but it does carry that origination fee. So the student would actually get slightly less, in fact, 1.062 less than what they've borrowed. The direct unsubsidized loan is not need-based, and it is included on the award letter typically. Just like the subsidized, it is 5.05% for an undergraduate student. It's a little higher for a graduate student, and the interest does accrue while the student's in school, and it carries that same 1.062% fee. So Federal Direct Plus loans, that's the it used to be the parent loan for undergraduate students, but now it's available for parents and graduate students. There is a credit check required. I will say the credit check is fairly minimal, and unlike a private student loan, which we'll talk about a little later, there's no debt to income calculation done to see whether or not the person who's borrowing can actually afford the monthly payments on the amount they're borrowing. I don't think that's a good thing. So on one side, it's great because it's easier to get, and that means more access. On the other side, I think people should be very cautious when they borrow plus loans and really understand what that monthly payment's going to be and whether or not they can afford that monthly payment, because that is not part of the credit check process for a federal direct plus loan. And so you could see parents or graduate students get themselves into a significant amount of debt with this program with payments that they really can't handle. The other thing I'll mention about plus loans is that a lot of times parents, very well intentioned, will borrow the plus loan and say in their mind or out loud to their student that this is really the student's loan. They're going to make the payments after they graduate. But let me just say the plus loan is in the parent's name. It stays on their credit report. And so again, I would be very cautious if that's the family arrangement that's being discussed, to make sure everyone is very aware of what the student would be capable of handling for a monthly student loan payment and a plus loan based on his or her occupation and possible income depending where they live. It can help pay for expenses not covered by other financial aid. The interest rate is 7.6%. It does carry a higher loan fee of almost 4.25 if we round up a little bit. And for the parent side of that, not a graduate student, but for parents, it's going to be the biological or the adoptive parent who can borrow that loan, and in some cases, a step parent. So private student loans, they can certainly help bridge the gap between the cost of education and financial aid. They are offered by banks or other private lenders, separate from the financial aid process and generally not included on the award letter, so keep that in mind. Students will want to do research about private student loans. Many colleges and universities will offer a list of lenders that students use on their campuses for private student loans. It is credit-based. Usually a cosigner is required, especially if it's a traditional age student who's trying to borrow, because they just haven't had enough time to build their own credit history. There are both national student loan lenders and there are Maine-based lenders. So things to consider about private loans. First of all, the biggest thing is the eligibility criteria. Certainly many lenders will require that you have to be in a degree program or that you have to be attending at least half-time. Because it's a private student loans, there will be lenders that maybe are a little bit more lenient. It could be that they will let you borrow for attending less than half-time. But really, when we talk about eligibility criteria, think about the credit criteria. That's really the thing that holds, that most people get stuck on. So credit quality is really important when you apply for a private student loan. Lenders are going to look at your credit score. They are going to do that debt to income calculation I mentioned previously. So they're basically going to say, okay, what's your income and can you afford to take this loan on when I look at all the other debt that's outstanding on your credit report? Now, some people think that's bad, but in a way it's a good thing, right? You don't want to get in over your head and the lender doesn't want to see you get in over your head. And of course, they're making the loan. So they're trying to assess the risk that somebody wouldn't pay that loan back. Other things that impact eligibility might be the presence of a co-borrower. You heard me mention that on the previous screen. So those are just things to keep in mind. With private student loans, interest rates can be fixed or they can be variable. And so that should be part of what the student deliberates about when they're looking at borrowing a private student loan. Do they want a fixed rate loan? Maybe the rate might be higher than variable rates, but then the rate doesn't change based on what's happening out in the market. And so that's a good thing because it provides consistent monthly payments for the life of the loan, and some people just feel better about that. A variable rate is impacted by interest rate changes in the marketplace and can change throughout the repayment period. But a little known secret, it may be less expensive than a fixed rate loan depending on the interest rate environment. And so when I worked for a lender years ago, I often found that my MBA students would take out the variable loan because they had done all the math and they figured they would do better off with a variable loan than a fixed loan. But again, that is contingent on what kind of interest rate environment we're experiencing as an economy.
Martha?
Yeah.
Do you mind if I just chip in while I'm here with you? Back to the eligibility criteria, I think something good to just kind of keep in mind. I had a student the other day really asking a lot of questions about this, and I think sometimes students don't always understand the difference between why they can go and get a car loan on their own, maybe, or maybe more likely or a little bit more easily, and not be able to get an education loan. And I think that concept of the fact that these education loans aren't secure, there's nothing the lender, basically can take if the loan isn't repaid. And I think that's something that's important to mention to students or families sometimes when they're struggling with why the eligibility criteria is what it is.
Yeah, I think that's a really great point, actually. And for many students, they may have never even heard of the term unsecured debt. But Mylan makes an excellent point. For them, the thing that they'll point to, as she pointed out, is that, well, how come I just walk into a dealership and get a car loan instantaneously, but I can't get this student loan? And it's for all the reasons Myla just mentioned. This is an unsecured loan, and there's nothing the lender could repossess. There's no home, there's no car that's backing that debt. So it's an unfortunate reality. Other things that I want people to know about private loans is the term APR, annual percentage rate. I think it is really important for people to realize there's an interest rate they get, but then there's an annual percentage rate. And that basically means the cost of interest and any origination fees that came with your loan expressed over time. So basically, what's the true cost of borrowing over time? So the best example I can give you is if you have a zero-fee loan, so you had no origination fees, and you went into repayment right away, and your interest rate was 5%, then your APR is 5%. If you think about a plus loan, which is 7.6% and carries a 4.25% fee, even if you pay that loan back right away, so you start making payments right away, if you were to take that combination of the interest rate and the origination fee and spread that out over time, the annual percentage rate that you're actually paying back is more in the 8% range. The reason it's really important to look at APR is because it's your best way to compare apples to apples if you're looking at a variety of lenders. So if you got approved for 3 different loans and a plus loan, APR is going to tell you which of those options is the least expensive. So it's a really good way to compare, especially if you're only looking at cost. Now, it could be that you go with a higher cost program because it has other features that you like. That's fine. But just understand what APR is and how it can benefit you when you're comparing different lenders. Other things to consider is whether or not there are different repayment and deferment options, whether or not you want to be with a local lender, so somebody that you could reach out to in the event that you had any issues. What is the quality of the customer service experience? And you can really gauge that sometimes just through the application process. What's the lender's experience? How long have they been in the student loan industry? And do they have a good reputation? So those are all things to consider as you're selecting a lender if you need to borrow from a private student loan. So additional considerations: is the application process online, or is it a paper application? What are the minimum, maximum, or aggregate lending limits, the amounts that you can actually borrow? What's the repayment term? Do you have options, 10, 15, or 20 years? Are there borrower benefits? For instance, if you make automated payments, will you receive an interest rate reduction? Most lenders will offer that kind of a benefit. And then what are the deferment and the repayment options? Again, we talked about could you have a graduated repayment? Could you have interest-only payment? Are you allowed to get a deferment with a private student loan? I will tell you, lenders are regulated differently than the federal government, and so they're actually not at liberty to provide long deferments. And so I think a lot of times lenders unfairly get knocked around in the press as being greedy or not caring about their customers because they don't have the ability to give the deferments, when in actuality they're regulated in such a way that they're not allowed to give more than 12 months of a deferment or a forbearance. So just things to keep in mind when you're considering private versus federal, or when you're considering private, right? You're comparing two different lenders. And then always ask whether or not there are prepayment penalties, if any. I have not come across any in all my years of lending, but it's always good just to keep top of mind. And then last but not least, do they have a cosigner release? That's a feature that a lot of people like, because maybe the 18-year-old needs a cosigner, but then mom and dad want to get off of that debt once they graduate. One thing I'll say about cosigner release is it sounds really good and easy when it's in a marketing brochure, but cosigner release generally means that the student has to get their credit looked at the time they're trying to get that cosigner released, to make sure that he or she can handle the debt at that time. So it's almost like reapplying, not quite. And if you have a student who has borrowed through a program that doesn't have cosigner release, or you know of someone that doesn't have cosigner release, you can generally accomplish cosigner release if somebody does a private refinance of their student loans. So that's something to keep in mind as well. So FAME does have student loan programs. The first thing we do, the Maine Private Education Loan Network, basically we were talking about unsecured debt. Mila brought that up, and it's a really great point. Well, at FAME, we are known as a guarantor, and we do that in the business community for business loans. So that basically, I'll give you an example. If you own a business and you go to the bank and you want to borrow for your business, and they say, ooh, we just don't feel really confident, that bank will reach out to FAME and they'll ask us for something called a commercial loan guarantee. So that means we kind of help provide insurance so that the lender feels more comfortable making that loan. Well, a few years ago, we decided to take that model and bring it to student loans. And so now we have Maine lenders who offer private education loans that do carry a FAME insurance or FAME guarantee. We call it the Student Loan Insurance Program. It is still considered an unsecured debt, so it's not quite the same thing as borrowing a mortgage or a car loan, but it does allow lenders in Maine to feel more comfortable making those loans. And it does include both private loans for while you're attending school, but it also includes loan refinancing options for your student loans after somebody gets out of school. And then FAME is also the administrator of the Maine loan. Most people have heard about the Maine loan. It's been around for about 30 years. It was administered previously by the Maine Education Loan Authority, but the legislature actually moved that program over to FAME back in 2015. And so let's go on to the next slide. Actually, before I start talking about this, I do want to just go back to the Maine loan. I would recommend for people, the Maine loan and the Maine Private Education Loan Network, I would recommend that people go ahead and spend a little bit of time on the loanforme.com. That's actually a website that was created by FAME where people could really assess their financial wellness. They could compare their Maine options for private student loans, and they could compare their Maine options to refinance their student loans. But I recommend people here on this webinar poke around that website, because I think it will give you a really good sense of what the interest rates are like. And there's a lot of great information for people, again, to consider before they borrow. So as part of our programs, we actually require financial education modules as part of our application process through iGrad. And we do that because just like us at the Maine loan or at FAME and our Maine lenders, we don't want to see people get in over their head, and we want to make sure people are informed borrowers. The learning objective of that financial education module are things to consider before borrowing, how you make that decision, so how you compare lenders, but also understanding credit reports, money management, and debt reduction strategies. I'm really proud of the fact that our Maine lenders really love this financial education module, because at the end of the day, they want their customers to be financially healthy as well, because of course, quite frankly, they do want to lend you car loans in the future, and they do want you to take their mortgage out with them. It's no secret. So while they offer those student loans, they understand that they don't want to see people get in too far over their head. They really want to help them make good, informed borrowing decisions based on their situation. In addition to the financial education module, which is part of the application process, Access to additional financial education modules are available to people that come through one of our 2 programs. And that's really great. We monitor the usage of those modules. A lot of people take advantage of them, and the topics include budgeting, saving, taxes, minimizing debt, and other repayment strategies. And then last but not least, FAME also offers private loan repayment counseling that colleges or universities can make available. So how do we support loan repayment and financial wellness? Well, we want to make sure that people understand there are things available to help them, not just financial aid, not just borrowing. And so what are some of those things they should consider? Well, many people hopefully are hearing more and more about the Opportunity Maine state tax credit. It's also called the Educational Opportunity Tax Credit. But basically, Opportunity Maine, that's its nickname. Opportunity Maine allows people to get a tax credit based on the student loan payments they make during that tax year. And so the credit can be anywhere from almost $900 for someone with an associate's degree up to $4,500 for someone with a bachelor's degree. They do have to fill out a worksheet when they file their Maine state taxes to see how much of the credit they qualify for. But I just remind people that a tax credit is really great because it's a dollar for dollar reduction in your tax obligation. So it really helps reduce your tax obligation. And in the case of Opportunity Maine, if you have an undergraduate degree in STEM, that tax credit can also be refundable. So I highly recommend people take time to go to the Live and Work in Maine website because they've done a great job outlining the tax credit. The tax credit is now 10 years old, but it's gone through a lot of iterations in the Maine state legislature, so it can be a little convoluted. We're trying to encourage some simplification in that program, but Live and Work in Maine did a really great job outlining the tax credit and who qualifies for what based on when they graduated college. The Alphon Leaders Program is another example of a way that people can get loan repayment assistance after they graduate. So the Alphon Leaders Program was started by the Harold Alphon Foundation, and it offers loan repayment assistance or student debt reduction payments up to $60,000 for someone who works in STEM and lives and works in Maine. So alphonleaders.org, I would encourage you to actually go to the website. We're collecting applications right now for our next awardees between March 15th and May 15th. So if there is anyone in your life, or if you know of anyone who's about to graduate in May, and they're going to work in STEM and stay in Maine, definitely have them look at Alphon Leaders to apply for that program. And then last but not least, it's really important for people to keep in mind federal education tax credits and deductions. The American Opportunity Tax Credit is up to $2,500. The Lifetime Learning Tax Credit is up to $2,000. With those 2 tax credits, one thing to keep in mind is that you can't use both credits for the same person at the same time. The best example I can give you is I take the American Opportunity Tax Credit because my kids are in school. As a result, they could not take the Lifetime Learning Credit as a taxpayer because I'm already taking the first tax credit based on their school attendance. And then student loan interest deduction at the federal level, up to $2,500 can be deductible on your student loan payments. And we've included a link to the IRS publication 970, which is all the education tax credits and deductions in case you wanted to learn more. So at FAME, it continues to be very important to us that we support loan repayment for students. And the reality is we know that students are having to borrow to complete their degree. We obviously wish that borrowing didn't have to be part of that equation. But while it is part of the equation, we just want to make sure people do it in an informed way and that we support them on the back end through their repayment. Part of the way we do that are through the programs and providing information like I was just sharing. But another way that we do that is to make sure that they know they can come to us and get information not only about repayment programs and tax credits, but also information about how to stay financially fit. So how to maintain their own financial wellness that supports their ability to repay those student loans. That's really, really important. And again, the Loan for Me has information about all of that, as well as our famemaine.com website has a lot of information and resources for financial education.
Now, while we're still on the loan for me, we did have a question about borrowing through one of the lenders in the main private loan network. And again, the loan for me gives potential borrowers an opportunity to compare all their options. But one of the questions we've received is, do these require co-signers? Well, if the student is a credit-worthy borrower standing alone, then a co-signer would not be required. However, the majority of students don't have an ability, they don't have income. These loans do have an annual income requirement. So if a student doesn't have the income to meet that requirement, then they would have to have a co-signer, or if the quality of their credit report isn't all there, they may need a co-signer. So, but as a general rule, a co-signer isn't required to borrow through the network, but the borrower does have to be credit worthy to borrow on their own.
Thanks, Jen. Yeah, and just a reminder too, I think when it comes to refinancing your student loans with one of these lenders, a new graduate might actually have enough credit history, but they might not yet have the income to support the refinance loan. So even a new graduate might find that they need a co-signer on a refinance. So these are just things to keep in mind. It could be that maybe they want to stay in repayment for a few years and then go to refinance after they've established themselves a little longer, or they've been able to have their income increase over time. But just like Jen said, a traditional 18-year-old looking to borrow for college typically needs a co-signer because they just don't have the debt they don't have the income to support the debt, or they might not even have enough of a credit history. And then when it comes to refinancing, it's a little different. It depends, right? Someone graduating after 4 years probably has 4 years worth of student loans on their credit report. That's great, but they might not yet have the income to support the new refinance loan payment. So everyone's situation is different, and that's just something to keep in mind. One thing before we jump off this slide, this is a shameless mother plug, but if you look at the picture of the young girl standing behind the bench, that's my daughter. So those are real Maine students, and so we're proud of all of them. We just happen to know all of them, and I'm related to the one behind the bench. Oh, so our slide is not advancing. We're a little stuck. Oh, there we go. So another way we support loan repayment, as you heard me mention before, was through financial wellness, and I did mention famemaine.com. Again, we do a publication every year called Manage, Making Your Money Work. It's a great publication that is in place. We really want to get at not just the nuts and bolts of setting up a spending plan and getting organized, but also what we call habitudes. So what's your relationship to money, and what kind of makes you tick? And do you need to think about that? And one thing that we tell people about with our Manage workbook in particular is this is a great exercise where we ask people to look at the future you. And that's really wonderful. Where do you want to be 20 years from now? And that can help you set those goals today, your short-term goals, to make sure you hit those long-term goals.
This is Jen again. So we received another question. How can we as parents, counselors, and other folks help our students understand or comprehend the burden of debt? So as Martha mentioned earlier, the student loan salary calculator offered on FAME's website is a helpful tool to bring borrowing to a reality for someone who maybe hasn't borrowed yet. And then also in Manage, the orange book that talks about financial wellness and budgeting and or spending plan, there's a worksheet in there that we use. I have 2 boys that have been recent college graduates, and while they were still in school, we wanted to demonstrate the impact of loans after college. So when they're adulting, so we used the budget worksheet in Manage to help them estimate what their budget might look like their first few years out of college. Rent, groceries, utilities, gas. The old car that they had in college isn't going to last too long, so you've got to plan for a new vehicle. So we coach them through building that budget and then saying, okay, now let's look at how much you borrow. So we feel some borrowing isn't terrible, so we had them borrow their federal loans. So you can, on average, plan on about $100 student loan payment for every $10,000 borrowed if you're going to pay those loans back over a 10-year period. Of course, if a student consolidates and extends the term, that's going to change. But that $100 for every $10,000 is a fairly decent measure. So we had them add student loan payments to that budget and say, okay, so if you think you're going to earn X, that equals Y for your take-home pay, because you've got to pay taxes. And is that going to work for your budget? Are you going to have any money left over at the end of the month? Are you in the red or in the black? So it's a great way to demonstrate the burden of borrowing too much.
Yeah, another recommendation I would make based on that question is I actually would encourage you to poke around our Claim Your Future game, because that's we designed it for middle schoolers, but quite frankly, I think it's really engaging for any age, even adults. So if you go to claimyourfuture.com, it's a game that allows you to pick an occupation. There's up to like 125 occupations on that website. All the salary is based on main salaries for that occupation, but it's also an exercise where you can look at different careers and you go through the steps of budgeting. So I think that that's another great way, like Jen was mentioning, real budgeting using a worksheet and actual student loan payments with her sons. I think Claim Your Future is kind of maybe a little bit more lighthearted way if somebody seems resistant, but that gets them thinking about what's the student loan payment that's likely to go along with that occupation. So for instance, if you pick an occupation that has a 4-year degree, what's a student loan payment that would go with that 4-year degree? Maybe you pick an occupation that has a 2-year degree. And so, it's a really, really great way to get at that. So our salary debt calculator, I think, is a quick and easy way to do it. I think Claim Your Future is maybe, like I said, a little bit more lighthearted, fun way to do it. And then, yeah, there's a spending plan. I think, and the future you, I think that's a really important thing. If we can get students to start thinking at age 18 that going to college and funding, whatever that's going to be, 2-year degree, 4-year degree, maybe just a 1-year certificate program, that period of time represents a time where they are making a sacrifice. They don't, or I would say should is not a good word, but we won't want them to live a lifestyle like they've already graduated, right? So live like a student while you're a student. What are ways you can, cut your expenses? I mean, maybe make a game out of finding the best deals with your roommate. There's lots of things, but I think when they think about the future you, where do you want to be 10 years from now, 20 years from now? And is it worth this 2 to 5 year period to be really strict and live frugally while you're doing that? And so hopefully that's another way to make it hit home. They don't want to, be having a huge student loan payment 20 years from now. So I think future you, Claim Your Future, budgeting, and then the salary debt calculator. I think that's a really great way to get at that. So the top 5 student loan borrowing mistakes, that was our feature in our 5 on the 5th this month. And so, again, taking on too much student loan debt, that goes to the question we just answered. Use the salary debt calculator. Spending every dollar you receive. So basically, I don't really even like the word budget. It reminds me of the word diet. So, I like the word spending plan, right? We spend money and we need to have fun and we need to build those things into our spending plan. So, I don't think we want to give the message that everything has to be this horrible austerity, right? We're not saying that. But if you have a plan and you stick to that plan, then it's actually very empowering. And you're not necessarily feeling like you're going without, but that you're making choices that really are going to get you where you want to be. Not knowing what you owe. A lot of students, I think, I don't blame them. It can be really overwhelming. It's kind of easy for all of us to stick our head in the sand. Um, so we would say not knowing what you owe is a big mistake. You want to make sure that you're looking at your outstanding federal student loan debt every year at studentaid.ed.gov. And if you are borrowing private student loans, do your annualcreditreport.com. That's a free annual credit report to make sure you know exactly what's out there. So really keep track of your borrowing. Make sure you understand the implications of a late payment or defaulting on your loan. We certainly don't want that to happen to anybody. We don't want somebody's credit to be hurt by making a late payment. So again, it's all about making sure people have the information they need so that they are empowered, and they can really manage what it meant to pay for their education and repaying their student loans. And then last but not least, I opened with this, but not completing your degree really is the single biggest factor that will impact your ability to repay student loans or impact a student's ability to repay their student loans. At FAME, we did create an information card called Leaving College, because we want people to realize don't make that decision too quickly, right? If you think you need to withdraw, make sure that you ask questions about what the implications are. Contact the financial aid office. Maybe you need to talk to an academic advisor, and maybe the thing is to change your major, not necessarily to leave school. And then I would say last but not least, if you are going to leave school, understand what that means as far as your student loans going into repayment. But we really hope that leaving college makes people stop and think and really deliberate whether or not leaving is the right thing, or is there some other thing they can do to make sure they complete that credential. Could they go part-time? Could they go to the community college? Maybe they're already at the community college. Again, talk to an advisor, change major, whatever's going on. Work with the school to really try to stick it out, because that really is going to be one of the biggest things that determines whether or not you're successful in managing your student loan debt. We do want to make sure that we give students also words of caution, right? So beware of student loan debt relief offers and credit repair deals. We get those calls all the time at our house because now I have college-age children. Really beware of debt relief companies that charge fees for services, because you can pretty much get all that information for free. All you have to do is contact FAME or contact your loan servicer, whoever's managing your student loans, or direct loan servicing if it's your federal student loans. So we just want to make sure people are aware and, again, really empowered and informed to make decisions that are good for them and their goals. And so your role as either a parent or a school counselor, you really are key influencers, and we know that. And the way that you can help is by providing financial education. Again, it doesn't have to be long and arduous. It could be a quick hit on our salary debt calculator or claim your future. Encourage sound financial decision making, so really help students understand taking the time to make a decision. I know they don't want to get overwhelmed, but at the same time, taking that time and thinking about 4, 5, 10 years from now is really important, and you could encourage them to do that. Stressing the importance of dealing with debt. So, when you make that commitment that you're taking out a loan, you are saying, I'm taking this loan and I know I have to repay it. And we certainly want them to understand the obligations around that. Encouraging your students to utilize free resources, and then realize that they don't have to go it alone, and we're here to help, and we're here to help you too. Maybe you want to put something together at your school specifically around understanding the impact of borrowing. And I think the other thing too, and you probably all see this in your counseling of students, it's really, it's hard. Students can fall in love, right? They fall in love with that they think it's the perfect campus and that's the school that they have to go to. I think encouraging them to really have a wide variety of options, and that there's so many ways to achieve their goals. And so, not feeling like, oh, if I don't do it this way, then I just haven't achieved anything, So I think that's really important too. And then last but not least, we actually have real people. They are pictured here at our 800 number, and Jen's in the pink. I am not in the picture, but you saw me on the front slide. But, we're here to help you. So if you call FAME or your students call FAME, we will help you any way we can. Mila's team is fantastic, so we're so fortunate to have our outreach folks doing great work on behalf of Maine students, but also thanking all of you for the work you do on behalf of Maine students and for helping us get the message out there about student loans. And like I said, I might change the title of the presentation, but get the word out about informed borrowing. So at the end of the day, that's what we want for our students, is to make sure they're happy, they're healthy, they're successful, and they can manage those student loans after they graduate. So I think that's it. I don't see that we have any other questions. Thank you again for all your patience with our technical difficulties, and I think we did just about finish on time. So that's it for us.